Right, so now we have reached to the final panel of the summit, and this time we're going to be talking about some secrets and investment ideas. Hopefully some family offices will be sharing with us. So I would like to ask the moderator, James Hedges, founder of Hedges Company, to come to stage, and the speaker, here's James.
Yeah, I think so. All right, David, I see, is here.
David is here.
Let's see. Who else are we waiting on? There you go. Okay. Very good. Hey, yeah. How are you? Yeah, exactly. Okay, good. That's great. Okay, so I guess that's, yes, I guess, well, we're missing Ali, yeah. Okay, maybe he got exhausted, you know, we're here at the very end of the line, so it's been a great couple of days, and it's a fun opportunity to talk about some of our thoughts on best strategies and ways that each of our family groups have carved out to do something that we're excited about. As I had mentioned earlier this morning when I moderated another panel, I come from a family office background and operated a fund-to-funds business and an advisory practice working with high net worth families, mostly family offices. And today I'm still very actively involved in working with families as well as managing our own investments. Why don't we all introduce ourselves?
Hi, Jim. Hello, everybody. My name's Adam. This is the first time I've ever come to a family office event, and the reason is 100% down to Anthony. So I just really want to say from the bottom of my heart, thank you so much for being invited. And I just want to say, and I'm sure all of you feel the same way, that it's been a fantastic event. So thank you very much, Anthony. Up till this moment, I would probably be telling you about my role at Mind Fund. I'm a venture capitalist. I've spent 25 years riding every single wave of the internet in the United States and Japan and Asia. Pretty successfully, although every single wave, almost there was a crash out on every single time. And, you know, but today we've had quite a bit of success. But actually, this time I also want to come in the perspective of my family. My family, I would say 100 years ago, was an industrial family in Germany. And when I think back over the generations, it seems that there was some kind of natural tendency for one generation to be defensive, one generation to be aggressive, which would flip back to a defensive, which would flip back to aggressive. My great-grandfather was an industrialist in Berlin in the 1930s. He decided, even though he'd been building his business for a long time, that it was probably not the best of times to stay. He decided to leave in the 1930s, which was probably a good idea, and lost mostly everything except a little business in Manchester, which was a textile company. My great-grandfather was also in the textile business in Berlin, which my great-grandfather died because the shock of moving from Berlin to Manchester, I think, was too much for him. But my grandfather spent the rest of his life building this textile business into a very innovative polymer coating business, which actually put the astronauts, we didn't put the astronauts on the moon, but it kind of did because they built the spacesuits. So when I was a little boy, I would see these pictures, in my wall. I said, "Daddy, where did they come from?" He said, "Well, NASA sent them to your grandfather to thank him for building the spacesuits." My grandfather was the aggressive, my father was the defensive, and he decided to tell my grandfather he should sell the business. And then they spent the next 20 years until about the 90s or longer in property and real estate and what have you. And then I came along and decided that I wanted to pursue this crazy internet wave and became what I am today, which is an internet venture capitalist. And I never thought about this thing until today. And one thing when I spoke to Anthony was this concept of being evergreen, which is kind of funny because I didn't think we would be in the Four Seasons, but the idea of being evergreen multi-generationally as a family, as an entrepreneur, as a venture capitalist, just when you think you know something, you've got to actually realize you don't. And that's really hard. Just when you think you're successful, you've got to be open again. Just after you've failed, you've got to kind of brush yourself off. You've got to be a mixture of aggressive sometimes and defensive otherwise. And I think that's something that all of us as families and all of us who've had experience in enterprise probably can relate to. And gosh, I'm really glad I shared this with Anthony. He said, you got to come to this event, and I'm glad I did. So thank you so much, sir.
Thank you, David.
Well, my family office history is a lot shorter. It's only about 10 years or so, not a century. So I made my wealth in the investment management game and in the investment research business. I started a product called Behind the Numbers, and I took on Wall Street providing sell recommendations to money managers, and took on Tyco and GE, some companies like that. And then I started a mutual fund called the Prudent Bear Fund. I guess I'm known a bit as a bubble spotter in that I identified back in actually 1996 what I felt like was a bubble developing. I was a believer in the Austrian School of Economics, and you might think that was ridiculously too early, but Alan Greenspan made his famous Irrational Exuberance speech back in 1996. And then we sponsored a symposium in 1999 called The Credit Bubble and Its Aftermath. And so I testified in front of Congress one time, and also saw the '08 bubble developing and felt like Fannie and Freddie were both going to go broke. And then I pretty much sold my business in '08 and created my family office, and since then have somewhat hibernated until actually produced a couple movies, was involved in starting a charity, and became an investor in a cybersecurity company. But since then have believed that there's a bubble in real estate in Australia, so I'm getting back in the game.
It's amazing to hear your story because nobody gets rich in the short selling business. It's like the exact opposite way to get rich. There are more broke short sellers and bears than there are, the other extreme. So kudos on that. Ricky?
Well, I already feel like I'm standing on the shoulders of giants, so it's lovely to be here. Ricky Hussaini, my background is in investment management and entrepreneurship. Family office and family businesses back in India is in agricultural real estate. So we've had that for many decades, but I tried to move away from that and do something on my own. So first job was $85 a month when I started off in '91. And I'm glad that I'm on a panel today. So that's been a nice journey. Have worked for the ruling family of Dubai as a part of the team which handled their asset allocation. Have invested in different verticals, so I'm quite bullish on fintech. I'm bullish on the blockchain, the underlying blockchain. Before that, I've been an investor in renewable energy setups based out of London. And I've also been quite passionate about how the internet can be used to remove the middleman. So basically bring in a frictionless experience to people using the net, using something which is disruptive both commercially and process-wise, and investing and rolling that out. So that's my background really. But most importantly, before I end, I'm also on the founding team of 3 international charities. I'm really proud about that, and one of them in particular is based in Sharjah. It's a school called Manzil. It's a center for individuals with disability. And we've rolled out a lot of inclusive mandates in the region. We won some international awards. We partnered with Harvard Medical School on autism research on that. So I think part of my ability to build businesses has also been directed and focused on the nonprofit side, and that's been by far the most enriching part of work.
Well, my name is Ali Al-Khamis, and pretty much I've been in everything. I've done everything in my 13 years of experience. And before that even, my late father, Allah yarhamah, he has ensured two things, work and education throughout my life. So pretty much my summer was always in banking. So I've been, since the age of 13, in a bank called ANZ Grindley's. I don't know who's young enough here to understand.
That
to
was my
remember
first
that.
job.
That
There
was
you go.
where I was. I was pretty much a trainee
I was
there.
an Indian rupee trader in 1991. Yeah.
So I went to ANZ Grindley's when I was at the age of 13. Every summer after that, for 3 years, I was there. Then I joined the immigrations as well for a summer, the airport for 2 summers. So pretty much I had a good experience even at the younger stage when I was in school. After that, this just showcases that UAE at that stage and that time had one direction, the families had one direction to do is pretty much make sure the generation is educated. Generation goes in for education. After education, I went to the States, been there for 5 years, did my bachelor's and master's, came back, was very proud and happy with my master's degree, being a UAE national, went into banking, understood it's a different lifestyle when you really work and have real responsibility. That took a real good on-job training of understanding how to manage and work time and people, especially when I worked in the corporate unit and facilitating these $5 million tickets to $25 million tickets and syndications and overdraft and LCs and all these different requirements and all these different personalities that you have to look at. Now all that is pretty much came down to a different stage at the moment. Now everybody's looking at the lifestyle of how to do things and the change of both the Arab view and the Arab investment style and what they're looking at to bring to the world is way different than what it was when I was working. And that harmony, and as well the society. So people, I just want to give you a single advice here. You have projects which are in Europe working perfectly fine, or Asia, or America. Just make sure of one thing. When you are coming here, you cannot implement it directly. You have to understand the social structure. You have to understand what the people want, what the government wants, and what is acceptable and how it is acceptable to get into the system here. Once you understand that cycle, it is much easier to connect. Because some people come here with the mindset of, I'm a tough negotiator, I'm gonna get this for my job, I'm gonna do this, I'm gonna make it happen. You can make it happen, but trust me, you're gonna get one job and nobody else is gonna work with you after that. So you have to understand the emotional side, the emotional intelligence side of how all these cultures work together, because it's not about UAE as UAE nationals, but about the people, because we are only, what, 15%? We serve a nation. We don't serve only the UAE nationals. So that is how you should work, that this country will always look at being number one for not only their UAE national, not only for UAE, but for the Arab world, for the Islamic world, for the people. So the ecosystem is way different when you look at investing here and how families in UAE think about where to invest, how to invest, and to whom they would give their money, and to which organization it is. So it's a very personal thing happens sometimes.
No, I think that's super interesting because many people here are looking to raise capital from the Gulf region, and there is clearly a massive cultural divide, and a lot of people walk in with unrealistic expectations about how long it takes to build relationships and garner trust and confidence in partners here. I'd love for maybe the two of you guys, since you're both based out here, to talk a little bit more about where you've built those bridges with partners from outside of the region, and you know, how you evaluate them and what's important. Some of that social cultural stuff maybe that you were referring to as well.
I think Ricky would have a much better idea of how it is, because he has lived here and he has seen people, so it is a different perception from his side. But from my side, most people that come here with these expectations, they have an idea that everybody has money and everybody would just invest or put their money in this MVP that will change the world or change the lifestyle or make it easier for people. But first of all, you need to make sure that the relationship is stable, because this guy or this family office or this investment company is going to see you every day of their pretty much the life cycle of this product. And maybe you'll have another product that they want to invest in. So looking at where you stand and how to merge a relationship, don't just go in and pitch. Start a relationship with the person. Start understanding how he is, how the culture is. Guys, please, when you come over here, make sure you understand, is it a day off? Is it not a day off? Is it Eid or not? Some people call me, hey, you said we will meet at 10 o'clock. I said, yeah, I forgot it was first day of Eid. But never mind, I promised you I came. But it won't help the relationship to grow because you did not understand what this meant to us. And even on Fridays, so I do understand Friday's not a day off for most people, but it is a day of a family here. We go for lunch together, we stay at our parents' house, and it's just to wind down. Because pretty much even Saturdays I do work, and most people do work now. It's not like how it was before. But harboring the relationship and ensuring that there is a harmony in the energy with the people. Once you have that connection, trust me, they will invest not in the product, but they are investing in you. That is what you need to ensure you get from these people. Once you have their trust, then it will go a long way. And it's not going to be a relationship of 1 year. I know people, and I think Ricky can validate, once you're in that circle and once you get that relationship done, you're going to have vast, you can say, diverse platform where you could always bring projects, and it's not going to be one specific line of business or one industry, but they are open to become fintechs. Like now, everybody wants to invest in blockchain, everybody wants to invest in different lines of lifestyle, which is the new thing.
Ricky, do you have stuff to add?
Yeah, well, this is a different perspective from the title of the panel, so we better get back to that
Yeah,
soon.
no, we got to get back on. So,
But just to quickly do an overlap between the theme and what Ali's been saying, people want to grow in different ways. I think some people want to grow and build a legacy. Some people want to focus on the material aspect of growth, the numbers. Yeah. Some people want to do it sustainably. So I think once you identify the other person and you identify where he's coming from, so the emotional intelligence part, I think, is critical. And then you align that and build that together, that's very nice. So given that Dubai is only 9% locals, so this is a great example of a city which has always understood the needs of other people around it and has been very responsive. So I think responsivity from a top-down level, and I saw that. I was blessed to work directly with His Highness, part of the team managing his private wealth. And the one thing we learned was responsivity. We learned to understand and be proactive about what the other person wants, to protect their interests also, to be in an ecosystem where you don't want to be just winning yourself, but you want other people to win also. Because when other people are benefiting from what you're doing, then the whole ecosystem grows. So I think that was an interesting cultural way of looking at it. And because the vast majority of people who live here are not UAE nationals, I think that's given the leadership a very unique perspective, which a lot of other governments don't look at. I mean, look at the whole world becoming more protectionist, more inward-looking. This city wouldn't have been there at all if it was inward-looking. It's the world's best example of an outward-looking place, period. And the numbers prove that. Yeah, the kind of demographics, the kind of people coming here proves that.
sure.
So, yeah.
All right, very good. Sort of getting back, because that was my fault that we sort of surfed off track. But in terms of investment ideas, could you two guys sort of spend a moment talking about things that you're particularly excited about right now, or things that you've developed that you'd like to share with the audience that are novel?
I think first of all, I want to sort of tie back to what I originally was saying about Evergreen, but also what the gentleman here was saying about relationships. I mean, just to be concrete, my fund is invested in some amazing companies. We're invested in ByteDance, which is probably the number one or the number two most valuable startup in the world, worth $75 billion. We just did one of the largest institutional investments in Hedera Hashgraph, which I think is a next generation distributed ledger, or some might call blockchain. But the reason I say that is to underline that maybe I have some authority to say the complete reverse, which is it's actually nothing to do with any of that. It's like people will look on the outside and will go, hey, you're really smart because you invested in such and such a company which became the most valuable startup in the world, or how the heck did you suddenly pivot to get the right blockchain, or whatever, or we brought Twitter to Japan and invested very early in that. How did you? And the answer is that and I think so many people, when they're successful, kind of don't credit enough that they were lucky. They were actually lucky that but it isn't just luck. There's a phrase in Japanese which is jinji o tsukushi tenmei o matsu, which basically means the human being does what the human being can do and does it very, very well. And they do it with other human beings. And that involves tenacity, perseverance, courage, love, and everything that we all know. But then you wait for destiny, you wait for God. And, I think if you just kind of develop that perspective, then it puts it in perspective. And so for me, it's always been about, okay, what wave are we going after? Who are the best people that I can collaborate with, partner with? And then through that wave, the things that you keep, which are permanent, are the relationships. There's the wisdom that you got from the previous journey, which hopefully will serve you well on the next journey. And then rinse and repeat. And it's actually, it's that sort of invisible structure, it's that stuff that's inside that actually results in the material stuff outside. I mean, maybe it doesn't for everybody, but it certainly has for me and my friends. And we've been doing this for 25 years, and we've done it consistently over every wave. So I think it works, And so, yes, in terms of specifics, I'll tell you a funny thing, because when everything was going crazy in the ICOs last year, it turned out that my partner had put our Mindfund name on one or two ICOs, and we'd made a lot of money. And in January, I kind of met him, and we talked, and I was very depressed. And I said, he said, why are you depressed? I said, well, because this reminds me, he said, the other two waves kind of felt like incremental steps from the 90s and the dot-com boom. But this one really feels totally crazy. It feels exactly like the 90s did. And I'm sure a lot of you felt that too, who experienced it. And so just because we made money doesn't mean there was pets.com and all that nonsense in the 90s. What I wanted to do, and always have done, is get involved in fundamental things. But I'm getting older. So please help me think who's doing fundamental things. He said, well, we'll be more specific. I said, well, in the 90s, if you remember, the web was scaling like crazy. The Yahoo boys decided that they could create a human-curated directory to directorialize the web. It went well for a while. Everybody who was building a website, you remember they sponsored the Super Bowl, and then they sponsored Yahoo and did well until the dot-com crashed. And after the dot-com crash, there were two guys in the garage from Stanford who had actually looked at the fundamentals and said, hey, maybe we need to be thinking algorithmically about search and PageRank, and everything else is Google, obviously. And after the crash, Google went from strength to strength. So I said to my partner, I said, Mark, please, it just so happened to be a little bit geeky, but Ethereum, the blockchain, everybody was going crazy, but actually when this thing called CryptoKitties, which, your kitty marries my kitty and gives birth to another kitty, and you sell it for $300,000. I mean, it was crazy. But anyway, this thing actually did demonstrate, if you look carefully, that there was a real use case for blockchain. But the problem was Ethereum crashed, right? It didn't scale. So I said to my partner, I said, if Ethereum is Yahoo, who's Google? So he thought about it. He goes away for a few days. He's on this Slack channel, which is the private chat thing. And he comes back, he says, I think it's Hashgraph. And look, it may not be Hashgraph, but the point is the reasoning for why we invested, and we invested a lot of money in it, and we've actually just put even more money to build the world's largest, the first accelerator for people who build distributed applications on top of it. The reason we did it was because of a thinking process of, hey, the wave, the interesting things should happen after all the nonsense has stopped, and it should be by people doing something really, really truthful and fundamental. And who is that? And so, where did that idea come from? It came from something that had stuck with me from a previous journey. So it's these kind of mindsets and you know, why we invest, why do we own a piece of the ByteDance, $75 billion company? It's precisely because we invested in a guy called Farhad in Los Angeles who we believed in. He'd been successful doing other things, but he did 3 or 4 different apps, all of which failed, but he was absolutely determined. He had the fire in his belly, the light in his eyes, and you know, one app led to the other and led to the other. Finally, it goes to this thing called Flipagram, which becomes in 2014 the most successful video app in the world. We were in the Series A. Sequoia Capital and Kleiner Perkins and whatever, they come in the Series B, but it ends up being bought in 2017 by this growing, but who would know, Chinese company, by an even more tenacious kind of fire in his eyes Chinese guy who had built this thing called Toutiao, which was an algorithmic AI-based newsfeed. And today this thing is now married with this thing called TikTok, which is basically Flipagram's grandchild. And people could say, well, you were so smart. No, it was nothing to do with that. It was all about the feeling of the journey, an intersection between our journey and the entrepreneur's journey and where that leads. And just kind of, it keeps happening. That's the only insight I can offer.
No, that's super helpful, because you describe something that's both subjective and thematic. Yeah. And I think that's a very important part of the process that frequently gets overlooked. We're becoming so quantitatively driven that identifying those waves and identifying that subjective stuff is so important. David, you made money in a very contrarian way by running these fund management businesses. Are you still investing the same way personally, or are you doing other things?
Well, I've invested in a private equity investment in cybersecurity, but I wanted to talk briefly about a thematic idea, which was, you mentioned how difficult it is to make money short, but actually thematic, a lot of people here have talked, about various investments on the long side, and, I want to let people think about a hedge, and actually being negative, can provide an offset to some of the risks that we're taking in other areas. And actually, I'm kind of worried about real estate in a lot of places. Even Dubai prices are down, I think, since 2014. We know there's bubbles in Hong Kong, in Sweden, in Canada, and Australia. So I've been involved with a hedge fund that I think is probably the biggest real estate bubble in the world right now, where there's bubbles to this. There's a massive bubble and there's 4 pins right in front of it. And therefore, I think people should consider, even though it's tough to be short, to be able to offset some of your long positions against other real estate, and it makes a lot of sense. The other thing I'd like to urge people to think about is Mr. Niederhofer, Roy was talking about how fiat currencies have always ended, and that you only have to get rich once, and therefore really do consider owning some gold, and really gold has not been mentioned that much at this conference, but a lot of people in the room come from families, with hundreds, if not thousands of years of history, and, gold should provide stability that really ought to be considered.
So how do you express, just real quickly to follow up, how do you express a short position on Australian real estate? Because everybody knows that's a disaster waiting to happen, but what can you do given the fact that the government supports the banks and all that kind of stuff?
Well, it's a little bit like the subprime trade that happened in the U.S., and it can be expressed through credit default swaps and through Forex, and we think that the Australian government will come to the defense of the banks, but we think that therefore the sovereign debt situation for the Australian government will be in trouble. We feel like the Australian dollar will decline, so it's kind of an esoteric trade, but there's ways to make money there.
But then it'll be a good time to buy property in Australia.
In fact, for our fund, I'd say 3 years from now, more people made money in real estate buying from the RTC,
Yeah.
than they did on the way down.
Sure.
A lot of people made a lot of money, on the way down, but then on the way back up.
Ricky, you talked about fintech. Is that sort of a core focus for you?
Well, currently is involved with a very interesting setup which created about 1.5 years ago, rolled it out earlier this year. It's a company called Buyback Bazaar, and in one word, it's an online pawn platform. So basically,
An online what?
pawn. So the whole pawn market globally is about $3.5 trillion.
See, I thought you said porn, so
Yeah.
you said pawn.
I don't use those kind of four-letter words. You can love, hate, pain is okay, but So yeah, that's been quite an interesting journey because the company look, the idea is to provide frictionless solutions using technology which can solve a need on the ground. I think that's the basic underlying premise behind any investment which I would look at. Whether you want to disrupt a pawn market through a particular fintech, or you want to look at robotics as a sector where costs of producing robots now is the same as Chinese cost of labor. So you have robots now which move on 4 axes, which cost the same as Chinese labor, which were 6 times more expensive 5 years back. So when you look at that kind of disruption, look at space travel. Why are people talking about space? Traveling on the Soyuz was $35 million versus $250,000 on Virgin, to go into space. So when you look at ecosystems where price disruptions have happened, and if you can get ahead of the curve and get into that space, then I think that's an opportunity to invest in. Let me talk just a minute on liquid financial markets because we are talking about proprietary investment ideas. I'm with you on the Australian real estate part. I think that's a huge bubble. 175% of GDP is the household debt kind of number. The most leveraged economy in the world is the Australians. And the currency has come off a lot. So it's come from an 81.5 level to where it is right now, is 15% lower. More to go there on the downside. I'm not as bullish on gold as you are because to me, the monetary accommodation globally is actually turning now. The US has been leading the tapering process. Japan has been doing that on a slower basis, and Japan is a huge whale when it comes to monetary accommodation. It's 3 times larger than the US. So when that bubble bursts, you want to be short Nikkei. They've been supporting their own stock and bond markets significantly over the years. So that's a big bubble in my opinion, which will fall out at some point soon. But also I think US has been leading the world when it comes to a rate hike scenario, when it comes to the currency appreciation, when it comes to their stock outperformance, when it comes to their fixed income yields being significantly higher than where the rest of the world is. I mean, US 10-year rates are 3.18 today, and German bonds are below 0.4. So, that kind of spread which we've had and which has built up over the past few years, I see that contracting going forward. So just some other ideas around proprietary investment.
Ali, you got a quick one to throw into the mix?
I'm with the big boys, though. Most of what they said is pretty much grade A. I'm not going to be competing with them in what I say. But
Big is physical right now more than anything else. I'm
Yeah,
jealous of you on that part.
But you pretty much woke up everybody with that pawn shop. Pawn,
It's late in the afternoon, right? You got to throw something.
Everybody's faces were lit up. Like, yeah, we need to connect with Ricky now. So anyways, what I'm saying is that I'm more into the fintech side of things. I would like to look into that and that growth and the trend. What we're bringing and what I'm looking at the moment is more into the cashless business of growth and avoiding the currency usage. I'm not speaking about crypto, but I'm speaking about the digital wallets at the moment. Utilization of crypto might come in the next 3 to 5 years, depending on how the governments in the Middle East and the governments around the world would allow the rules and regulations or looking into how to have it frictionless at the moment. But step by step, I think, starting with educating the people of not utilizing cash at the moment through digital wallets, store values, like what has happened in India through Paytm and through WeChat Pay, Alipay, and bringing that to the region here. We're starting with Buki Pay, which pretty much is a local brand, and we would connect with all payment companies like Paytm, WeChat, Alipay, bring them under us, have them explore the market, get them through here. Let these 75% of our UAE people, residents included, not to utilize cash. And 85% of the people here who order e-commerce, they only get it cash on delivery. Even though we have POS systems which are wireless, they still go for that. So I want to look at into changing that lifestyle of doing things. And as well with a lot of family businesses, yes, they are bigger opportunities as well, but you have to focus on what is available for the people. I am more into investor relations, customer service, and how to allow not only organizations to grow, but if you give the people a lifestyle to grow, they will just buy it in all sense, and in apps, and in any kind of direction. It does not go specifically to being a cashless system, but tomorrow, once they're used to it, then you have crypto coming in as a currency, as a digital asset. It doesn't need to, it's just a form or a facilitator to purchase something for a government or for an industry to accept it. But again, you have to know the value of it, and the problem is the fluctuation. And until that happens to slow down, then we can look at the next steps of going forward.
Super. I think we should just see if you guys have any questions, because we're winding up, but maybe one or two questions. No? Well, I think people are ready for cocktails. It's fair. We've done our work. We've done a good work here. Thank you guys very much. And again, thank you to Anthony and his team. This has been a real treat to be up here with you guys again. And
thank you,
enjoy
Anthony.
have a safe
Cheers,
trip
Anthony.
home.
Anthony left a promising career in Hollywood to be with us, so.
So, ladies and gentlemen, we have reached the end of the 7th Global Family Office Investment Summit. You know, I hate endings, but Anthony just promised me that he will continue organizing these wonderful summits. You know, it was a great privilege that you had fruitful discussions, though I think 2 days maybe have been short, not enough. You know, a conference becomes a success only if participants arrive. They are the lifeblood of a conference. Thus, we would like to express our sincere thanks to all of you who came from across the globe, I think more than 25, 30 countries. Special thanks to all of our sponsors, moderators, speakers, and of course, Anthony and his team, who put a lot of effort to make this conference a success. So, ladies and gentlemen, I think you had a long 2 days and have participated actively, and I am sure that you are looking forward to getting back to your respective homes. So I thank you once again for your participation and wish you all a safe journey back home. Thank you very much. Thank you.